Hey everyone, I'm looking at this really fascinating bottom-up financial model for NIO'S Q4. My analysis suggests an overall outlook of 124,000 total vehicles, delivering that revenue across their three distinct brands. That number represents a significant leap from previous quarters, and understanding how they get there requires digging into the details of each brand's positioning and market role. Let me unpack that brand strategy because they've set up a really specific three-tier system to examine. You've got the premium NIO brand, which represents their heritage and technological flagship status, the mainstream ONVO line that targets the heart of the electric vehicle market, and that new compact Firefly brand designed for urban mobility and younger buyers. These three distinct tiers are meant to capture different segments without cannibalizing each other. It would be really easy to assume those cheaper Firefly models would just be the volume drivers, padding the numbers to hit that 124,000 mark. I think a lot of analysts might look at the lower price points and immediately conclude that those are the engines of growth. But the model is very careful not to overstate the impact of those volume drivers. In my view, they project 67,000 units for the premium NIO line, 38,000 for ONVO, and only 19,000 for Firefly. This distribution tells me that the model assumes NIO's core strength remains in the premium segment, at least for this quarter. What's truly fascinating here is the conservative pricing strategy applied to those numbers. They didn't just assume everyone is checking every option box and buying the absolute most expensive trim available. I've seen too many models fail because they get overly optimistic about average selling prices. To keep things grounded, the model anchors itself to the midpoint of publicly available China MSRPs. So an entry-level Firefly hatchback is modeled at a realistic $17,350. All the way up to $111,500 for the flagship NIO ET9. That range reflects the actual purchasing behavior I've observed in the Chinese market. It prevents the revenue projections from getting overly optimistic, which is why I find this model more credible than some of the more aggressive forecasts floating around. Here's where it gets really interesting. When you dig into that premium NIO tier, you realize they aren't relying on their whole lineup evenly. There is one specific vehicle acting as the ultimate catalyst. In my opinion, the ES8 is the strategic revenue engine of this entire projection. I've been following NIO for a while now, and the ES8 has always held a special place in their lineup as the flagship SUV, but this model elevates its importance to an entirely new level. Even though models like the ES6 and the ET5 are crucial for providing volume support and maintaining brand presence in key segments, the ES8 is the heavyweight driving the actual profit. The model estimates 38,000 units for the ES8. Let me put that in perspective. That's roughly 57% of the total NIO brand deliveries. But because it commands an average selling price of $61,500, it brings in roughly $2.33 billion. When I calculated that contribution, I realized just how concentrated the revenue stream becomes. So it represents just over half the volume, but it single-handedly generates 64% of the entire brand's revenue. That is incredible leverage. It's like having a restaurant where the burgers keep the lights on, but suddenly everyone starts ordering the dry-aged steak. It completely transforms the bottom line. In my experience, this kind of product mix shift is exactly what separates profitable quarters from break-even ones. Connecting this to the bigger financial picture, it's a textbook story of operating leverage. My analysis suggests if they can hold their operating expenses steady at $780 million, once you cross that threshold and those fixed costs are covered, profitability essentially skyrockets with even the slightest improvement in margins. Because every extra dollar from a high-margin vehicle like the ES8 drops straight to the bottom line. The data shows this beautifully. If they manage a 15% gross margin, that generates about 3 cents in earnings per share. But if they can bump that margin up just 4 points to 19%, the EPS leaps to 12 cents. It literally quadruples. It's a massive jump, and it illustrates why getting the product mix right matters so much more than simply chasing volume for volume's sake. We have a catalyst for NIO stock. Because ONVO today announced the official launch of the highly anticipated ONVO L90 Black Knight exclusive gloss black package, which is strategically priced at exactly 12,000 yuan. This exciting comprehensive package thoughtfully includes a premium gloss black front badge, rear badge and lettering, darkened window trim, striking side lower trim, and stunning 21-inch multi-spoke gloss black wheels. It is strictly only optional for the premium 6-seat and 7-seat Max and Ultra trims, and absolutely must be paired with the gorgeous Jingyue black exterior color, expertly catering to users' personalized styling needs. By offering this exclusive design tier, NIO is successfully driving significantly higher average transaction prices while boosting brand prestige. Locking this upgrade behind higher trim levels perfectly incentivizes prospective buyers to spend more, improving the profit margin per vehicle sold. This bold strategy highlights their deep, intuitive understanding of current market demands for truly unique, aggressive automotive aesthetics. Furthermore, this calculated move firmly solidifies ONVO's unique position as an exceptionally forward-thinking brand, fully capable of reliably delivering both exceptional inherent value and top-tier factory customization. Smart investors should immediately view this product expansion as a wonderfully strong leading indicator of robust financial health and remarkably agile product planning. The impressive Black Knight edition achieves much more than simply enhancing overall visual appeal. It effectively and directly translates massive consumer excitement into highly tangible revenue growth. As vehicle deliveries rapidly ramp up, these intelligently targeted, exceptionally high-margin cosmetic packages will undoubtedly serve as a powerful catalyst for upcoming quarterly earnings reports. The company is making incredibly smart, highly profitable strategic plays that Wall Street absolutely loves to see and reward today. Wrapping this up, the big takeaway is that because NIO's Q4 revenue is so heavily dominated by a high-priced vehicle like the ES8, their path to profitability doesn't have to be a slow, painful grind. I've watched too many companies try to grow their way to profitability through massive volume increases, only to find that the margins aren't there to support it. If they keep operating expenses in check around that $780 million mark, they don't need to sell 1 million cheap cars to make the math work. In my view, profitability can appear suddenly and aggressively. It's a sudden leap into the black, which is a phenomenal position to be in. But it does leave you with an important question to ponder. If a single high-priced vehicle like the ES8 can act as the primary catalyst to catapult a company into profitability this quickly, what happens to that exact same financial leverage if the market cools and buyers suddenly shift away from premium flagship models? That's the flip side of this concentration risk. The same dynamics that amplify profits on the way up can amplify losses on the way down. So as impressive as this quarter could be, I'm also thinking about sustainability and whether NIO can replicate this success across multiple product lines over time. That's the challenge that will determine their long-term trajectory, not just a single quarter's performance.